Since the company's recent conference call, Sea's stock price fell by more than 30%. Let's see what was discussed at the conference call that market was disappointed about. In the earnings call, Forrest Li, the CEO, started by reporting that Sea Limited delivered strong results and progress in all three segments: Shopee, Garena, and SeaMoney. Starting with Shopee, this e-commerce platform saw improved margins, revenue growth, and a double-digit quarterly increase in gross orders. Sea has been focused on reducing operating costs while still improving user experiences. Logistics operations were made more efficient, thereby reducing costs like manpower expenses, with Sea's network reaching more people in various markets in Southeast Asia. The company views streamlined and seamless logistics as a crucial competitive advantage. Next, about improving user experience. Improved digitalization of scheduling and order tracking were introduced. Also, more diverse delivery options were launched to cater to user preferences. For instance, Singapore saw the addition of 600 collection points alongside existing self-collection lockers, while Taiwan introduced 24-hour access lockers at around 150 convenience stores, with plans for further expansion. These efforts improved user engagement metrics, which bolstered Shopee's standing as a preferred e-commerce platform in the region. For example, the focus on growing the live streaming feature resulted in increased participation and demand from buyers, sellers, and creators. This was evident during campaigns like the 7.7 live streaming campaign in Indonesia, which saw a 12 times growth in transaction volume and a 10 times increase in buyers compared to a normal day. For the 8.8 shopping campaign, about 25% of Indonesian buyers watched live streams on Shopee Live and made close to 5 million orders in just one day. Shopee's live streaming feature is positioned as Indonesia's leading live streaming e-commerce platform, as indicated by Populix's report. It also expanded its pool of influencers and content creators through the Shopee affiliate program, adding over 1 million carefully recruited influencers in the second quarter. New user attraction extended to less accessible areas of the markets, facilitated by the cost-efficient infrastructure. For seller, support was enhanced by upgrading services and tools, offering seamless onboarding and attentive management. For example, initiatives like Shopee on the Road, free in-person training to sellers across Brazil, and a partnership with Thailand's Creative Economy Agency introduced local Thai artisan products to the world and provided Thai sellers with business training and marketing support. Overall, the company's achievement with proven profitability at scale makes it the first and only e-commerce marketplace in Southeast Asia with such a record. Dan Lee stated, increased investments in growing e-commerce business might lead to bottom-line impact and occasional losses for Shopee and the group. And this was the statement that market responded very negatively, because basically, market was expecting Shopee to make profit now. But the CEO said he might continue to invest further despite losses. However, he still emphasized self-sufficiency and cost efficiency as a key competitive mode of Shopee. Now, moving on to the digital entertainment business called Garena, both quarterly active users and quarterly paying users increased sequentially, driven by Free Fire's improved user retention and engagement. Bookings for Free Fire grew quarter-on-quarter, suggesting signs of stabilization while maintaining its position as one of the largest global mobile games. Lastly, regarding its digital financial services, SeaMoney, Lee observed more apparent synergies between Shopee and SeaMoney ecosystems, contributing to the overall growth. Revenue growth here was mainly driven by the credit business. Profitability, measured by adjusted EBITDA, continued to improve significantly on both yearly and quarterly basis, reaching $137 million. This is all the while maintaining a stable and healthy risk profile with non-performing loans due by over 90 days at around 2% of the total gross loans receivables. More specifically into digital banking offerings, they were further developed as seen by expanded user services and convenience in its bank in Indonesia. The bank app became compatible with QRIS, a local QR code standard, and BI Fast, a real-time simplified bank transfer service, enabling faster and easier transactions. Lee then highlights the integration efforts of the bank with broader ecosystem through features like direct debit, which enables Shopee buyers to pay from their bank account. The focus remains on addressing underserved financial needs in the market and collaborating with ecosystem partners for sustainable business growth in the long term. On an ending note, Lee asserted that Sea has made good progress in recent quarters in its efforts to enhance efficiency, improve UX, and solidify its market leadership. The commitment to agility and adaptation in response to user preferences, industry trends, and competition will further solidify the company's leading market position in the Southeast Asia region. Now, let's examine Sea's second quarter financial performance. The group's total GAAP revenue was $3.1 billion, up 5% year-over-year. Responsible for almost 70% of total revenue is the e-commerce segment, and it generated $2.1 billion in revenue this quarter, which is a 21% increase year-over-year. Then follows digital entertainment with revenue of $529 million. It showed a slight decline from Q1, but also showed a 41% decline on a year-to-year basis. For those who are new to this company, Sea was the publisher of a very popular game called League of Legends until 2022. However, since losing this publishing contract, Sea's gaming-related revenue decreased significantly, but this quarter showed its stabilization. Next, digital financial services revenue was $428 million, up 53% year-over-year. Lastly, other services revenue amounted to $28 million, a very small portion. R&D expenses decreased by 24% year-over-year to $283 million compared to $370 million a year ago. So compared to other big tech companies, Sea's investment in R&D is smaller. After deducting the expenses, the operating income was $283.8 million compared to a loss of $836 million a year ago. Dividing by segment, digital entertainment generated $297 million of profit, down from $457 a year ago. E-commerce segment recovered significantly from operating loss of $726 a year ago to an income of $66 million this quarter. And digital financial services also improved from loss of $123 million last year to an income of $121 million this quarter. As a result, the company's cash flow generated from operating activities was $1.2 billion, compared to negative $1.2 billion a year ago. This is very similar to Coupang, the South Korean e-commerce player, which also turned from negative $1.1 billion to a positive $1.1 billion of operating cash flow recently. And these quick turnarounds prove that these large e-commerce platforms can indeed generate positive profit and cash flows if they adjust their growth efforts in the short term. Moving on, here is the summarized version of the investor Q&A session. When asked about the take rate, management first claims that there was a sequential growth in GMV with double-digit order growth in the second quarter. In terms of the take rate itself, an uptick in advertisement and spending on the platform led to increased core marketplace revenue. But this investment impacted VAS, or value-added service revenue. Regarding its fluctuation, the CEO claims that while the core marketplace take rate continues to increase, the overall take rate is affected by VAS revenue due to its accounting rules. For example, shipping subsidies are netted off from logistics revenue under VAS at an order level, impacting overall take rates and revenue growth. The general trend remains positive for core marketplace take rate, so commissions might continue to increase, although not as rapidly as in the past. Regarding e-commerce growth opportunities and investments, Shopee Asia sees growth opportunities in resilient consumption and new areas like live streaming and video content-based e-commerce. Also, the outlook for Brazil remains strong, with a continued growth focus and cost efficiency, which led to improvements in EBITDA losses per order. And other markets outside of Asia and Brazil are relatively small, with mostly positive contribution margins and won't require significant investments. Regarding fintech strategies and its margin trends, the fintech business currently focuses on maximizing synergies between Shopee and SeaMoney ecosystems. The goal is to build a strong platform with resilience, capabilities, and user service. Also, this business has shown strong cash flow and significant year-over-year growth with a stable risk profile. While it's still in its early days, the emphasis on growth with maximizing profit while maintaining good cash flow. Lastly, there are 3 important news articles that Sea Limited shareholders should be aware of. First, the stock experienced a historic 29% drop in one day, resulting in $10 billion losses in market value after Sea's second quarter performance, which missed analysts' expectations in revenue and profit. The company's shift in strategy back to prioritizing growth aims to tackle competition from Chinese Alibaba's Lazada and ByteDance's TikTok by focusing on live streaming and expanding product categories. Due to a lack of visibility on these investments, JP Morgan and Citigroup analysts both downgraded Sea's stock. Next, Sea disbanded its investment arm, Sea Capital, in May 2023. This was launched in March 2021 with an initial capital of $1 billion and has halted new equity investments since 2022. This move comes amid global cooling in tech investing and influenced by factors such as higher interest rates and economic uncertainty due to the pandemic. Lastly, Sea shut down operations in some Latin American countries and cut Free Fire staff in Shanghai in response to ongoing revenue downtrend, something the management didn't discuss while highlighting Garena's positive metrics in the conference call. Along with gaming job cuts and the suspension of operations in several countries, multiple new games were cancelled. Since 2021, gaming revenue declined continually year-over-year because of generally less interest in gaming and Free Fire's struggle after its banning by the Indian government in February 2022. India was known to be Free Fire's largest market in terms of downloads, but the game download was banned because of Sea's tie with the Chinese big tech company Tencent. Okay, that's it for today's video, and thank you guys for watching. And I'll see you guys again in the next tech video. Thanks guys.